From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli.
And I'm Nadine Blaney. So what a session that turned out to be. First, record heights, and then 11:30 rolled around.
Yep, the jobs number was, of course, once again leaving many economists with their jaws on the floor. 65,000 jobs created versus expectations of 25,000. And we had stimulus from China too, kind of underwhelming.
Yeah, I've taken the time to read a few notes this afternoon. RBC Capital saying, in one word, stellar. I mean, that's the view of the jobs market. Sure, we may not like it if it means that interest rates will remain higher for longer, but it is good that people are in work. However, CBA is saying, yep, it even took them by surprise. They are still officially sticking with their expectations for a cut come December, but there's a lot more demand in this economy than the RBA wants.
Yeah, let's bring up the CBO 200 and see where that sort of, rally fizzled somewhat. Still a very good day, up 0.6%, but certainly not more than 1% gain that we had, as you alluded to before that 11:30 report. Although you did see the Aussie, I was on air, and Nick Twidale, of course, who's a currency strategist sitting with me, we just saw it go, ooh, like that.
Oh, that was good timing.
Yeah, now our other themes of the day, uranium really popping, this Amazon, of course, news into SMRs, and Fraser's going to talk about that with us momentarily, but big moves coming from the uranium
also
players.
some Sprott buying in physical uranium, so that's an interesting one. It's just fortuitous that Fraser McLeod from Shaw Partners is joining us. He was one of the first to be talking about uranium on this very program. And behind this rally were some pretty impressive single stock moves, and Star Entertainment Group was one of them. So it was always called a binary outcome.
Yes, well, we were wondering, was it going to lose its Sydney license? I was talking to Henry Jennings just after the news broke. He said, look, that was never going to happen. There's too many jobs at stake. It's just about new management, which is already coming in, turning the ship around somewhat. And Star has survived, sending its shares higher, but shorts into Star, the highest in about 3 years, I think, ahead of this report.
So, sector-wise, what led the market? What lagged the market? Let's take a look. Interest rate-sensitive stocks, those REITs, interestingly, up. Really solid performance coming through from the likes of Center Group, which is up by 1.8%. Goodman Group, it's not on this. Oh, it is on the screen, up by 1.25%. Also, those industrials looking very strong today as well.
Okay, having a look at some of the other moves on the market too. When we look at the banks, of course, they were rallying into that jobs report, still ended higher, CBA up 1.2%, above $140.
Now, BHP and the miners lagged to a large degree, but it had its iron ore output, its production output out today. Copper production was up, iron ore beat, but there were some concerns around the quality of the ore in that report.
And CBA entering into this unenforceable undertaking, with ACMA. So basically paying a $7.5 million fine to the Communications and Media Agency for breaches of the Spam Act. Apparently 170 million emails that you couldn't unsubscribe from sent between November 2022 and April this year. And they already paid $3.5 million for a similar move last year.
So if Star Entertainment was the second best performer on the 200 today, what was the first? AMP. It hit an over 3.5-year high today after it reported strong growth across its businesses.
And NextDC entering an agreement to purchase a new data centre site, obviously a very hot topic at the moment, down 0.4%.
So quarterlies in the energy space as well. Santos, its forecast 2024 output at the top end of the range. Pick a first oil production may start early, and Beach in that sector as well announced a successful commissioning of its Moomba carbon capture project.
And Neuron Pharmaceuticals saying that Daebu has received marketing authorization in Canada, sending shares up 2.4%.
Treasury Wine was also higher today. It was more significantly higher around the noon hour when it was picked as the stock of the day. It had its AGM today. It also had a broker being pretty positive on the company. So I had a chat with Grady Wolf from Bell Direct and Sanjeet Narendran from Team Invest.
Obviously, the recent China tariffs being removed, hugely positive for a Treasury wine estates. We don't cover them personally at Bells, but I would probably say a hold rating at this level. It's trading really high. It's very expensive for what it is. We also don't have the outlook for China being very positive, because it is positive, but until this material stimulus reignites serious demand in the region, it's only talk right now.
They've been performing average. Their returns haven't been that great. They've actually been growing, well, it's have negative growth. And with the PE being so high where it is now, it's not something that I would consider buying, even if it was a Team Invest company. But it is, you'd think a business like this, selling wine at all ends of the market, would be such a no-brainer, but it is so subject to the way management's actually running it. And I think there's been a little bit of history with the management and some of the proxy advisors, which may have derailed some of their focus.
All right, welcome to the COB. Fraser McLeod from Shaw and Partners. How fortuitous, as Nadine said to us earlier, to have you on a day like today when we hear this news coming through from Amazon and, of course, this fraud activity as well.
Yes, indeed. Thanks very much for having me on, and a very bullish day it is for all the uranium plays really around the globe. We had the overnight market obviously leading the way in North America beforehand. And look, for uranium, it was always destined that this would be a fundamentally strong trade for us over the past couple of years and into the next couple of years, because it's going to be able to deliver this carbon-free future. There was always geopolitical tensions around energy, and the supply we knew was uncertain. But what the world is now waking up to, and we can see that in the big moves that we've seen in today's market, is that the world is looking at the AI future needing to be powered by nuclear. We've got the big hyperscalers who are now putting their money on the line, and they've got lots of it. So yesterday the news came out that Amazon was spending $500 million directly buying into an SMR provider, so the small modular reactors, which are destined to be able to grow into the nuclear energy future. And but even a few days before that, we had Google. They ordered 7 SMRs in order to power their data centers. And last week, or even just a couple of weeks ago, we had Microsoft, which was directly tapping into the 3 Mile Island nuclear power station, which was very famous for all the wrong reasons many decades ago, in order to be able to supply electricity to their data centers over the next 20 years. So basically, the news that the world is adjusting to now in the equity markets is that the hyperscalers are desperately in need to be able to win the AI war, and they know that the key to that is being able to have cheap carbon-free electricity, which is a big leverage play on the equity market for the uranium providers.
So, local investors, I mean, many are exposed to US equities, such as Amazon, but local investors, when they're thinking about playing that thematic specifically, do you still reckon the miners are the way to do it?
Look, we do. There's not many ways. You could buy utility companies. There are a few, and some of those are doing very well in the US. But the key leverage way in our eyes in order to play the theme is being able to there's a supply shortage. We know that supply shortage is coming. If you're a utility to be able to supply carbon-free electricity 24 hours a day to data centers in Europe or North America or even in China, then nuclear is the way in which the only real practical solution that the world has. There is a huge lack of investment over the past 20 years in the sector. So there's only a handful of listed entities you can buy in order to gain the leverage that you're looking for. Three of our favorites listed on the Australian market would be NextGen, which is actually a Canadian company. They run their CDIs here and have a listing in Toronto and in New York. Now they have the best deposit, and everyone knows it. They've got the Arrow deposit in Saskatchewan. It's the best in the world, astonishing grade. The management at the moment are laser focused to ensure that they've done everything that they can in order to get the final federal environmental permitting. There's a huge amount of time and effort goes into getting, in the Western world, getting environmental permitting for any mine, but especially a new uranium mine. And news on that should be hopefully weeks away rather than months away. But we value those at that stock at $17.50. The stock's up 10% today, as is Bannerman, which is again a very large project based out of Namibia. Lower market cap there and higher cost in terms of cost of production, but does come with even more leverage and 15-year mine life once they get that one up and running. But that's fairly early stage, and our target on that is $7.40. And then you've got our old favorite over the past couple of years that has done incredibly well, which is Paladin, which is now in production. They own 75% of the Langer Heinrich mine as a production restart also in Namibia as well. So and they're also just at the end of their takeover of Fission Energy, again a Saskatchewan deposit. So there's lots at play. A lot of generalists now entering back into the market, and over the past month it has been incredibly bullish for sure.
Fraser, if you had to just pick one, or maybe the uranium ETF, what would be the pick?
Sure. Look, I mean, you could ultimately you could buy the commodity. You could buy, if you just wish to be, you could buy the an ETF of the commodity itself. You could buy U.U if you wished. But I'm an equities guy. I like to be able to back companies. Ultimately, we are Australians. We like our resources, and so it's the three that I've mentioned to you are incredibly attractive for different reasons. But when you look at the quality of something like the Arrow deposit, it is very, very exciting. Once they get that environmental permitting over the line, that mine will definitely get built. They need a lot of money to do it, but the payoff is also incredibly quick as well. So they'll need about say 2.2 billion Canadian dollars, maybe 2.4 Aussie, in order to get that mine built. Once it's built, however, it's a cash generating machine. They'll probably end up being a top 10 market cap resource company around the world. So it truly is one of the best deposits, never mind the resource, one of the best mining deposits in the world.
Yeah. Fraser, how receptive are your clients to this whole narrative, or should I say how excited are they about this narrative? Yep. Because reality and sentiment can be something quite different.
They are. So, I mean, we are managing client money, so we have to be obviously matching risk appetite against the positions that we are taking. But we also have been in this theme very early. It was 3 years ago we were banging the table when uranium was $20 a pound. It's now around mid 80s and probably going a lot higher. We think it will reach $150 a pound at its peak. So in the last bull market in uranium, we saw some huge uplift in prices. There is safety in price as well. If you're in at a cheap price and you're adding to more sizable positions in portfolios and keeping a very close eye on things, then clients tend to be very happy.
Okay.
Good to have you with us, Fraser. Thank you. Fraser
Thank
McLeod
you
from Shaw and Partners.
Thanks. Nice to see you, Fraser.
All right, let's have a look at the leaders and laggards on a busy day. I mean, we didn't quite close at the intraday record, but still an excellent day on the market. AMP we touched on after its quarterly update, up 17%. Star coming back to life with keeping its Sydney casino licence, and perhaps that fine seen by some as a bit of a slap on the wrist, and then of course the energy players, the uranium players, excuse me.
We were just talking about. So good to see some of those really punchy share price moves. Let's see if it is as swift and severe to the downside. Helios is off by 5.5%. No news there. Challenger did come out with a bit of an update. It is off by 4%, even though Goldman says that it was a disappointing first quarter. It's actually still still quite positive on the stock, and Jarden lifted its price target to $8.10 per share. Mineral Resources had a broker downgrade, Stanmore and Karoon Energy on the list.
All right, in the small end of town today, Imricor up by an impressive 23%. Then you've got the gold miner St Barbara having a good day. A couple other resource players like Lotus and Canyon, and then Aura Energy up 8%.
Why do I always get stuck with I'm kidding. The laggards, DUG Technology off by 9.5%. That was on a discounted raise. Enero as well. Orthocell down by 6%. That's pretty punchy. I'm not sure if there was any news, but anyways, Lynch. I was also surprised not to see OFX Group here, because OFX had an absolutely terrible day, down by 36%. And that was after an update on its first half trading for the year. It came in below not just market expectations, but its own expectations as well. But safe to say on this list, DUG Technology is off by 9.5%.
The reason is because you know more about small caps than me, and you can feel it out.
Okay.
Tonight, the ECB interest rate decision, Eurozone CPI, we've got retail sales in the US, business inventories, and of course those weekly jobless claims.
Yeah, we are expecting to see US retail sales increase slightly in September. Also the Philly Fed index. There's lots on tonight. Those jobless claims, Scotty was telling me just yesterday, Juliet, they're really going to be important potentially, even though very messy because of the impact of the hurricanes that we've seen in Florida and much of the southern United States. But still, with jobs such a focus for central banks, and including our own, it will be interesting to see the market reaction there.
And locally, of course, we've got China's data dump, you've got GDP, retail sales, production, investment, new home prices as well. All of that coming as we continue to see these piecemeal pieces of support coming through from authorities.
And so, final check-in on where this local market finished. There we go. Nice to see the CBOE Australia there in that format. It's up by 0.6%. When we take a look at the S&P ASX 200, we've got it sitting up at 8,355, up close to 0.9%. Don't forget, we've got earnings as well. We've got earnings in the US coming out tonight, and just reminded me, I saw some breaking news coming from Reuters. European companies, we don't talk about them a lot, but Nestle, his name we all know, missed its organic sales growth target, also cutting its outlook going forward. That just breaking as this European session comes to life.
Maybe it'll come back in the next quarter because cocoa prices ratcheting. Netflix out tonight, of course, in the US. But that does it for today. We'll see you from 9:45 tomorrow.
See you then.